Traders at UBA say they expect market sentiments to remain mixed for the rest of the week as investors digest the latest MPC decision, while they also wait for the outcome of today's T-bill auction. Chuka Nwachukwu, Head of ALM and Balance Sheet Management at UBA, joins us in the studio for a market update. Chuka, it's a pleasure to have you on the program.
Thank you.
No doubt, the market continues to digest the impact of the MPC decision yesterday. And I guess my first question to you is, what should we expect going forward? There's already been an uptick in rates. Do you think this is just a first-round effect? How do you see things playing out in the short term?
Okay, thank you, Wale. What we expect to see within the short period is to we see spike in rate. Currently, the T-bills is trading around 5%, 5.5%. So this announcement by CBN will actually trigger increase in fixed income rates, especially the T-bills and the bond.
Right. And let's talk a bit about this liquidity overhang that many are speaking about, the FAC allocations that should begin to trickle in next week. How do you see that impacting yields?
Yeah, it will impact significantly because the system has been very tight throughout last week. So the only respite we see now is the FAC, which should come in anytime from now, between today and tomorrow. We've seen system liquidity tighten to well over 450 billion. This as a result of bond settlement last week, where we had well over 656 billion, that was mopped up in the system. So for us, I feel that the market is going to be tight, considering the fact that even though the bond auction, even though there's some coupon payments that will be paid this week as well as the FAC. But the pronouncements yesterday, by CBN, we kind of like mop up excess liquidity in the system. And, if you watch the body language of the CBN, acting CBN governor, he clearly is worried about the inflation. And then he's trying to see how he can mop up the excess liquidity, not using the usual monetary tool.
And of course, those concerns around inflation are clearly justified when you take a look, when you consider the quantum of liquidity that is expected, even from the FAC allocations alone. Yeah. But then the big question is how the government potentially will react to some of the demands for higher wages and palliatives, how that potentially could also have a pass-through effect in terms of inflation. What's your view on the impact of the actions of government on inflation specifically? Because at the end of the day, we know that the central bank will continue to keep an eye on inflation.
Yeah. So for what we've seen so far is the monetary aspect of government policy. The physical aspect is yet to come, which obviously by the time the president has his cabinet set up, then we'll see what the physical policy will do. Don't forget, some of the issues affecting inflation is not solely on the monetary aspect of it. Physical aspect of it is there as well. For example, the major culprit in the inflation figure, it's the food inflation, right? Which obviously, insecurity is playing a great deal in terms of farmer headers clash, and in terms of inability for farmers to bring some of these produce to the end user. So that is a major concern, which the government will have to address on the physical side of things. Coming to the monetary side of things, I think that by yesterday's CBN pronouncement, you could see the body language. Yeah, on one hand, they want, to lend, they want the economy to kickstart by lending, to real sector. But on the other hand, the inflation is also affecting some of their policies. And that is why you see that the voting pattern, to retain was about, retain and to hike was about 6-5. So majority still favored, retaining the MPR,
But does that surprise you, given the quantum of inflationary pressure? I would have thought that the MPC members should be all towing the line of raising rates, at least in the short term, even if it's just to signal.
I'm a bit surprised because, to be honest, I thought that, like you mentioned rightly, they would toe that line. But again, you look at body language of the government The president clearly wants low interest rate just to be able to kickstart the economy. And I think CBN is just trying to, should I use the word, trying to please both sides in terms of, yeah, this is what the government wants, but in the real, actual sense, this is what is playing out in the market. And so, on the professional side, which is obviously what I think that the CBN guys told the line, they're on the professional side of things, in the sense that, look, they know that the issue we are facing is mainly on the inflationary side of things. And if that is not tackled, it will create a bit of uncertainty.
Right. Okay, let's talk a bit about the forex market, because we also know that the central bank focuses, the MPC specifically is focused on that as well. And we've all clearly seen the impact of the demand pressures on the parallel market rate, and there doesn't seem to be any end in sight in terms of addressing that. And many are suggesting that there is no solution that the monetary authorities can bring to the table that does not include a significant injection of foreign exchange to at least address this backlog in demand.
So I'll also go back again to the physical side of things, because for now, like you rightly mentioned, any deal that does not bring huge amount of liquidity in terms of foreign exchange into the system, will really not have any adverse effect. Presently, the demand is quite huge, and this demand is still out there. And so, in as much as CBN has been intervening, it will still not be enough. And so, the physical side of things has to work, in the sense that government has to, generate FX through sales of, our major export is oil, and government needs to work on that aspect. I think they've done greatly well in terms of oil theft and all that, but again, they need to do more. So that will help, cushion the effect of the demand, especially when the government has to, dip into our reserve, which is around 33 billion, in order to defend the naira. So that again has to be sorted out in terms of, putting the right policies in place, making sure that whatever policy, whatever deal that is done, bring in a lot of liquidity in the system.
All right, let's leave it there. Thank you so much for your analysis today. Chuka Nwachukwu
Thank you.
is the head of ALM and balance sheet management at UBA.